Okay, now we have a rather sad article. Um, this comes out of tech.eu. Title of the article is Turkish food delivery giant Getir raises 250 million and restructures into two businesses. Turkey, the Istanbul company's home market, is now its only market. Okay, the article begins. Turkish food delivery giant Getir has received $250 million in investment led by Abu Dhabi wealth fund Mubadala Investment Company. Founded in 2015, the company has raised over 1.8 billion, previously raising a 768 million Series E funding round in 2022. However, the company has struggled in its expansion with a recent withdrawal from the European market. In May, the company announced its exit from Germany, which also resulted in the closure of Berlin grocery delivery service Gorillas, which was acquired by Getir for 1.1 billion in December of 2022. Getir pulled out of its other European markets, France, Italy, Spain, and Portugal in 2023. So yes, Turkey, the Istanbul company's home market, is now its only market. As part of the funding, co-founder and CEO Nazim Salur will be replaced by Getir's Turkey head Batuhan Gultakan. Okay. Shareholders approved a split on Sunday. The company will now consist of two separate businesses, a food delivery business in Turkey, controlled by an existing investor named Mubadala, and separate standalone business that includes all the company's other assets. The founders of Nazim Salur and Getir will take a controlling stake in a second new entity comprising Getir's remaining businesses, including its B-Taxi ride-hailing operation, its jobs board, N11 shopping platform, and its U.S. Fresh Direct grocery business. Getir's finances ownership structure is as follows. Getir founders control 40%, Mubadala controls 32%, Ishbank's Maxis Fund controls 20%, and Crankstart, Michael Moritz's investment vehicle, controls 8%. Getir board member Hani Barhush shared, Mubadala has been a long-term and committed investor in Getir, and this capital injection reflects our strong confidence in the promising future of the company's core business in Turkey. End of article. So this is really just actually sad news for a company that over many rounds has raised 1.8 billion. They raised 768 million Series E in 2022, sort of at the end of the pandemic. They split the company in two now. They pulled out of Germany. They pulled out of France, Italy, Spain, and Portugal last year in 2023. And then it also resulted in the closure of Berlin grocery delivery service Gorillas, which was acquired by Getir for 1.1 billion. So let's get this straight. The company received a capital injection of 250 million from Abu Dhabi's wealth fund Mubadala, and yet they acquired 1.1 billion for Gorillas in Germany. So it says the company announced its exit from Germany, which also resulted in the closure of Berlin grocery delivery service Gorillas. So it's not quite clear if Gorillas was only in Germany or beyond Germany, but if the company acquired it for 1.1 billion and now it's closing that market, and this was an acquisition that Getir paid for 1.1 billion in December of 2022, and exactly a year and a half later, throughout 2023 and then now half of 2024, that 1.1 billion is gone. So yeah, the reason I'm saying this is a sad article is that the numbers speak for itself. This was really quite unfortunate. And look, the company has exited Europe. The company has exited the UK. The company has exited other markets. I'm looking at another article here. They exited the US. Yeah, so the only 7% of its revenue was generated inside the UK, according to a different article. Yeah, it amounted to the creation of 23,000 jobs inside the UK over the past 3 years, supposedly. Yeah, but this is another pandemic company that maybe got a little too far over its skis it's just a sad, sad case because there's a lot of companies that like this that they try to diversify. So it says with the second company that's not technically Getir in Turkey, it includes buy, taxi, ride-hailing operation. It includes a jobs board. It includes N11 shopping platform, and it includes U.S. fresh direct grocery business. And then it says Getir finances ownership structure is Getir themselves at 40%, Mubadala at 32%, Ishbank at 20%, and then Crankstart at 8%. So it really is a down round. The valuation is gone, and if the gorillas, if the German gorillas is correct that it's a full closure, then it's just the money came in and it wasn't even applied to Getir. It was applied for the deployment to acquire other companies, and yet this company itself, Getir, with all of its sister companies or subsidiaries, wasn't able to get things together. So yeah, it's as the article, it's really just a sad, sad story. So even though the title of the article that it says Turkish food delivery giant Getir raises 250 million and restructures into two businesses, I don't find anything positive about this article. They downsized. They probably have a lower valuation. They're in less markets. They needed a capital injection. It's unfortunate. And they lost 1.1 billion with gorillas in Germany. It just seems absurd in a way. But nonetheless, this happens more often than people want to think. And here we are. So that's my 2 cents on this article. And I feel very bad for them. But hopefully the 250 million will get them around the corner and maybe they can turn things around.